Good morning, good morning, good morning, good morning, everybody. It is Hugo Quintanilla here, doing things a little bit different. No open house today, but I did want to talk to you guys on this live stream. So happy Sunday. Today is December 3rd, about 5 o'clock. So wanted to say hi, wanted to come on and teach you guys a little bit about real estate. Last week we had an open house that went really, really well. And I wanted to thank all of you for coming by and sharing that place. We actually got it under contract, so we are super excited for the new tenant to enjoy the new property. And I want to thank all of you for tuning in and for sharing that live. But today, kind of along the same lines, I wanted to come and talk to you about getting ready for next year for buying a house. But why do I really care so much that everyone get ready to buy a house? More than anything else, it's not so much that I want you to purchase a home. I want you, well, which would be great if you did, obviously. More than that, I would want everyone to understand that they can. One of the biggest things that I've seen this year, as opposed to previous years, and I feel like it's more intense this year than other years, has been the fact that we have such a dominant mainstream media that has really berated the normal home buying audience with these messages that houses are too expensive, that interest rates are too high, and that affordability is incredible to comprehend right now, and that buying a house is actually probably one of the worst decisions that you could make. And those are all stories that, though true in some regards and in some places, may not apply everywhere. And you have to understand that when I talk about buying a property, I'm talking predominantly about my licensed area. If you're not aware, am licensed in Maryland, but I can help you all over the world, actually. I'm licensed as a CIPS realtor, so I can do international real estate, which is a great added benefit. And we got a little guest appearance. This is Fluffy for anybody that doesn't know. But like I said, I can help you internationally. I can help you locally in Maryland, and I can help you in all 50 states with just the network of referrals and just agents that we have all over the place that can assist you. Professional, reliable, and trustworthy agents that know their specific market. Because, like I was trying to say earlier before Fluffy came to hang out, was real estate is highly localized. It's a market and a business that really, more than anything else, depends on the people in the community. I always like to say that homes need people the same way people need homes. And you'd be surprised how many places deteriorate just because of lack of care. Properties will fall apart if people don't take care of them. So, really, there are tons of opportunities out in the world right now. It's just you have to have the right mindset and the right knowledge to know what you can and can't do. And one of the biggest things that I think getting ready to buy a home does is that it lets you know your numbers. It lets you know how much you can afford, where you stand in the process, and what you need to improve on if you need to. The American dream to me is really freedom. It's about being able to do what you want, when you want, and on your terms. Real estate is one of those businesses that can help you grow and expand your portfolio, create generational wealth, and achieve a level of freedom and autonomy that not too many businesses can do, especially with very little education or very little prior experience. So I could rave all day long about the wonders of real estate and how it's changed my life, just simply in the last 5 years. But really, we're not here to talk about that today. The biggest thing that I wanted to show you guys was something like this. What we have today is an affordability issue. And NAR finds that typical home buyers' annual household income climbed to a record high of 107,000 in wake of rising home prices and mortgage rates. And the article goes on to talk about how interest rates and affordability have gone to a point that's so high that most first-time home buyers are being priced out of the market. Yet I'd like to let you know that even this study itself found that from last year to this year, there's been a huge increase of about 16% in first-time home buyers. So though the stories might say that, yes, it's becoming more difficult to qualify for a loan, it might become more difficult to purchase a home, it is not impossible. And it's all about just knowing your numbers and knowing what you need to qualify that really can make the difference in purchasing a home. You got to know who you're talking to. There are so many types of financing programs, and there are types of programs for all types of businesses, all types of professions and careers, and all types of situations. Low credit, high credit, good history, bad history. We have loans for doctors and nurses, as well as practitioners and teachers. Really, sky's the limit. It's all about knowing who you're talking to. If you didn't know, loans can be produced by one of four entities. They can be done by a bank, by a broker. They can also be done by a credit union, and I believe a mortgage lender. So those are typically the four institutions that predominantly do lending. Each one of them has their restrictions and has their different types of requirements for each one of their programs. So be very, very careful and know that even though you're might have been denied for one product or one company, there are still many other companies and other ways to apply. There are other things you can work on, and there are things that you can do to increase the amount that you're making, reporting, or satisfying some sort of requirement to make it more easy for you to actually purchase the home. Sometimes it just takes a little bit of playing around with the numbers and making sure that you are reporting enough and your debt to income is enough to satisfy the loan requirements. As always, I would highly recommend that if you do go through the process of getting your credit checked and going through the process of talking to a lender, to perform a hard pull. You'd be doing yourself a disservice if you just get pre-qualified. It means nothing in this day and age. Even the pre-approval letters sometimes can mean nothing. And that's why as realtors, we tend to call lenders and double check and make sure that all the information is correct and everything's been done to a T. Because if it's not the most accurate, up-to-date information, we could be running the risk of going into a transaction under contract and losing a deal, losing your dream home, because we actually don't have a loan that you can use. It really is devastating. So don't let that be you. Don't let that be your situation. And do the work. Yes, it's going to ding your credit about 20 points for about 30 days. I understand. If you're trying to look for a property to lease, maybe not the best suggestion to do. Maybe wait till you get the lease property if your credit is a little bit shaky. But the most important thing is that you are familiar with what's on your credit report. I would highly suggest that you go to a website like creditkarma.com and sign up for their services, which are very, very good and highly reliable to at least monitor your credit. And also think about going to a place called freecreditreport.com. You're entitled to a free credit report at least once a year. And that will show you everything. It'll show you what information is on record for you and what is important that is on your record that you can maybe dispute or change or discuss with the appropriate bureaus, because there are all sorts of options when it comes to improving your credit. You can do consolidation. You can do a loan. Oh man, there's tons of ways. You can pay a service to do it. But really, the most important thing is that you are knowledgeable on what your loan could look like and what you really need to qualify for a loan. Which loan product you want to go? Do you want to do an FHA loan? Do you want to do a VA loan? Do you want to do a conventional? Conventional is by far the hardest to qualify for, but has the highest flexibility. FHA has great programs that are down payment assistance, but have added fees that span the life of the loan. And VA is reserved for our military servicemen and women that have served, really active and veteran service members can apply and can use that to grow a portfolio. Also, I'm not sure if I've let too many of you know, I've gained an MRP certification to help military professionals relocate. So that is just another reason that you should work with, say, one agent over another. Agents have different levels of education when it comes to this career. There are all types of programs sponsored and not sponsored by the National Association of Realtors, and designations and certifications that basically tell you that, hey, this realtor spent X amount of time and effort and money to get this added extra knowledge and instruction. Usually these are required classes. They require tests and require us to pass certain courses. So I'm really, really proud to have all these designations and certifications. And we can talk more about that another day. But really the big thing that I wanted to talk to you guys about was that article and letting you guys know that it's imperative that you start figuring out your numbers for next year. Even if you don't want to buy a house next year, even if you don't think about buying a house in the next 5 years, if you don't start today to look at your numbers and understand what it takes to purchase a home in America, you may never do it. And I don't want to be doom and gloom like that, but really, I can tell you from experience, the person that I met 5 years ago, they didn't care about their credit, didn't care about where their money was going, didn't care about where they were going to be living in about 2 years, is still leasing. Whereas the client that I met 5 years ago, it was told me, hey, Hugo, I'm working at this job, I'm working at that job, but I want to buy a house one day. And I'm okay if it's a condo. I'm okay just starting with something small and growing from there. That client is now in a townhouse. I have people that have been able to change their whole lives around and stop leasing every year or every 2 years and be in their own home. I had the honor of helping a first-time home buying couple last year purchase their first property, and they had no children, no pets, just two people in love wanting to buy a home together. And it was so rewarding, and it brought me so much joy to see them wander through their new home and start planning where they were going to put this and where they were going to put that. And honestly, it's one of the most special things that I think I get to do in real estate is to do that and show people these opportunities that they have. Because I think more than anything else, and it's shocking to me that people don't realize what they can do. They don't realize what they can do with their money. They don't realize what they can do with their head. They don't realize what they can do with their hearts when they really put passion behind a project. It's shocking to me that I believe sometimes more in my clients than they do in themselves. But really, it's because I know it works. I've seen it in my own family. I've seen it in my loved ones. I've seen it in my friends. I've seen how starting with one condo and just paying that off and then leasing it, leasing a room inside of their home, leasing a basement, can just bring that extra level of security. And really, it's life-changing, guys. But let me not take too much more of your time, because I know that it is Sunday and there's football on, and you guys could be doing other stuff than sitting here watching me. So I did have some notes that I just wanted to touch on real quickly. Let me just, sorry for the long intro. if you guys did want to get in contact with me, speaking of intros, feel free and do so. I am online all the time, so you can find me. You can Google me, Hugo Quintanilla, Realtor. I've left my information down at the ticker below, so feel free and check me out. Again, yourrealtorhugo.com. Hugo at lnf.com is my email, and 240-389-4846 is my phone number. Feel free and call or text me. There's no lead forms that you got to fill out. I am a real person. There's no chat GPT you're going to be talking to. So make sure, just send me a text with your questions. I am licensed in Maryland, so I can directly help you there. But like I said, I can help you with real estate questions all over the nation and all over the world now. So really, guys, thank you for tuning in. Let's jump into it. Affordability. If your numbers are right, you can buy a home. And that's really, it goes without saying. You don't need to make $1 million to purchase a home. Really, the average right now is running about $50,000. But more importantly, you have to look at what your debt is. Some important numbers to really consider, and I want to give you guys a formula if you have something to jot down. The formula that I'm going to give you is very, very simple, but it kind of gives you a ballpark of what you can afford and where you are. Now, this is very, rudimentary and generic. So don't take this 100%, to the cent. But with this formula, you'll be able to actually kind of calculate where the ballpark is, what you can afford, and you can sit with yourself and that number and think, hey, with this number, can I buy in the area that I want to buy? Because really, more than anything else, and you'll see this with the stats that I give you from Montgomery County or the rest of the center of Maryland, is that prices here are really expensive. The rates here, are yes, elevated, but the prices here are that much more elevated. Appreciation here skyrocketed during the last few years. So we have very properties that are not renovated, going for very large amounts. So being able to afford in these cities is sometimes difficult for the salaries of the people that work in these cities. So what we were seeing, and myself, I've done it before. I've had clients go to other cities, purchase there, and then commute, or purchase somewhere else where they can actually afford more, and then house hack or develop a portfolio so that they can move up and closer to where they want to be. But for the formula that I wanted to bring up to you guys, this will give you a good idea of your starting point and where you are. From there, we can, work on a few things. We can talk about, paying down debts. We can talk about, maybe getting an extra job, savings, gifts. We can talk about a few other solutions that we can do for upping this number and for maybe getting you qualified for more. But this formula is a great way to get started and to give you a ballpark. So what you're going to take is you're going to take your gross annual income and divide it by 12. Super simple. You're going to get your monthly income. Okay. From there, you're going to subtract your minimum monthly payments for everything that's on your credit report. So remember how I said go get your credit report earlier? You're going to go on there, you're going to see everything that's reporting, and you're going to take down all the monthly minimum payments that you have for your credit report. That can include student loans, that can include cars, personal loans, credit cards, revolving debt, things like that. Subtract that from the first number. So say you had $12,000 a year, and say you divide that by 12, you're only making $1,000 a year. Okay, my monthly payments are about $100. So I'm subtracting $100 from the $1,000. We're going to be left with $900. Okay, so that $900 is basically how much we're left with after our expenses. That's free and clear for other purchases and other things. We're going to multiply that number. So that 900 for me, we're going to multiply that by 0.45. And what that is a debt to income ratio. And what debt to income is the number of your debt divided by the total number of your income in any given month. So 0.45 means that 45% of your income is debt to income. And that's pretty conservative. Most places will ask for a 36 or around there, but 45 gives you plenty of breathing room, so you're not spending all your money on just a property. So we take my number and we multiply it by 0.45, and that'll give us a monthly payment that we can afford. So let me pull out my calculator right here for the example, just so that I can give you guys some ballparks. And then if we multiply my 900 example by 45, that'll give us only a monthly payment of 405. That doesn't sound like a lot. It doesn't sound like I can afford a lot either. So that's your monthly theoretical mortgage payment that you could afford. I want you to take that number and perform one last step. You're going to divide it by 8. That number there times 100 will tell you how much you can afford and the value of the property that you can afford. So if we kind of take it back and we do a more realistic example than my, $1,000, I can't afford anything. My place is like $5,000. So it's not really a good example for me. But let's say like a normal salary. Let's say we're making like $40,000 a year. I'm going to take $40,000 a year and I'm going to divide that by 12. That's going to give me $3,333 a month. Say I have like a $300 car payment. I'm going to take $300 off that. And that's my minimum payments. That's it. I don't have anything. It's just $300 for my car. So we're going to subtract that. That's going to leave us $3,033. We're then going to take that number and multiply it by 45. Remember our debt to income ratio that we want. That's going to leave me a possible monthly payment of $1,365. So $1,365 is how much house we can afford. Let's divide that by 8. And finally, that would give us 170. Multiply that by 100. And actually, not 100, 1,000. And we should get 170. So as you can see, guys, it's not out of this world to, let me run that again, sorry. Give you the exact numbers one more time. 12, then we're going to do minus the 300. Proof that this is live. You can see me here. 1365 was our monthly, 1365. And then we're going to divide that by 8. That's going to give us 170, and we're going to multiply that by 1,000. Excuse me. That's going to give us 170,000 with 625. That's going to be estimated the amount of home that we're going to be able to afford. So as you can see, for 175,000, I'm pretty much in the condo to low townhouse range. Probably about 2 bedrooms, maybe about a 1 bedroom. And that's for about $40,000 a year with a $300 car payment. So you guys can see that it's not out of this world. It's just really, you have to understand where you're starting from, what you need to get to where you want to go, and who you need to talk to. Like I said, there are 4 different organizations that can lend you money, and a simple formula like that can really give you an idea of where you are. Now, it gets a little bit more specific when we're talking about, your actual debts and what you can do when playing around with those numbers. And I always implore you to talk to a mortgage officer or loan originator to talk about those finer points, because there could be some things that you pay off some credit cards or you pay off a car. But to be honest, and I will mention this really briefly, before paying anything down, make sure you consult with your loan officer. Sometimes even car payments, before paying them or when you pay them down, they actually negatively impact your credit score because that collection or that monthly payment is gone. So w- before finishing paying, make sure you consult with a mortgage officer. Typically, within 10 payments of your last payment for your car, it no longer counts to your debt to income. So around that time, if you think about it, you can start to inquire about buying a home. So that's something great to remember that, if it's within 10 months or 10 payments, you really don't have to worry about that car payment anymore. And also, for all my cosigners out there, if you are cosigning on a loan and you can prove that that person is making all the payments and you're making that cosign is having no financial burden on yourself for 12 consecutive months, then you can actually, it doesn't impact you. You can actually purchase a home yourself. A lot of people are worried, like, hey, if I co-sign my brother, I co-sign my friend, for a house, will that impact me? It can if it shows that you are paying the property and it becomes part of your debt to income because a loan like that will be part of your debt to income. But when we're qualifying you, if you can show statements from an account that are not in your name and show for 12 months that the payments were being made by another party and another account that's not in your name, that doesn't land on your debt to income. It lands on the person's debt to income that's paying for it. And that might not impact you. Again, we have to double check with your lender and make sure that you're in that special group of people that can apply for that situation. But those are all situations that can help you get to your house sooner. To be honest, right now, there's not a lot of competition because really interest rates are substantially higher than they have been. But truth of the matter, historically, they have still been low. So before they get much higher, thinking about the process is not a bad idea. Remember, you're not paying any money unless you really go into the process of buying a home. The worst thing that could happen is we pull your credit and your credit is damaged. Well, not even damaged, but influenced, negatively impacted for about 30 days. It will recover. It's not a big impact. But always talk to a lender because they are the ones that know the ins and outs of all the programs in your specific state and new programs that might come out for counties because counties have programs, the government has programs, and those are all things that are worth your time and looking into. So, when should you start? Today, right now. Start tackling debt, start tackling your savings, start thinking about what your goals are and where you want to be. You're not going to be young forever. I'm a millennial myself. I was born in the 80s. I never thought I was going to live to see my 20s. And now in my 30s, I'm looking back and I wish I would have started sooner. So I can't implore any of you enough, but please double think about where you spend your money, who you spend your money with, and why you're spending your money. Be intentional with your purchases. I'm not telling you don't spend money, don't go to, Christmas shopping, don't go to the holiday party. I'm telling you be intentional with your money. Be certain with every cent that you spend and give every dollar a job. I'm a big fan of Dave Ramsey. If you have the time, go check him out. His Debt Snowball is a great way to get started in financial liberation and financial education. Um, but more than anything else, you have to realize that I can't teach you everything about finance. Buying a home is one of the largest purchases that many people make in their whole lives. And it shocks me how much people are undereducated for the financial purchase. And financial literacy is not something that widely discussed or common knowledge. We have a stigma against mental illness as well as talking about money and finances amongst friends, amongst peers, amongst coworkers, and just in general. So to destigmatize that and to try and to really educate more of you, I'd like to have more of these conversations about the things that I've done, the things that my colleagues have done, my friends have done to not only better themselves and to make a better future for themselves. I have friends that have gone into investing, gone into crypto, gone into real estate. I have friends that have started businesses, become entrepreneurs. Really, sky's the limit, but you have to get up. And you have to get motivated. You have to get passionate, and you have to start pounding the pavement and start doing the work. Your debt is not going to pay itself. Your house is not going to buy itself. It's not going to find itself. And the only way for you to get into a dream home is start taking the steps that it takes to get closer to it. And you'll never get there if you don't take the first step. And what's the first step? It's literally understanding the process and just knowing that it's possible and that you don't have to be alone in this. You don't have to be afraid. Okay? So, guys, really, I appreciate all of you for tuning in on this preliminary broadcast. Today, we were live on YouTube and Facebook. So I hope to see you guys again on both platforms. You can find me on YouTube, Facebook, Instagram, LinkedIn, TikTok. Please follow me online, search Hugo Quintanilla Realtor, and I should pop up on most social medias and on Google. So thank you guys for your time. I look forward to seeing you guys next week, where we'll talk about another topic about how to get ready for home ownership and for how to buy a home in 2024. But really, guys, I do appreciate your time. I appreciate you guys coming in and spending this 30 minutes with me. And I look forward to talking to you guys again. And I will see you guys soon. Make sure and connect online if you'd like. I'll leave my information there on the ticker so you guys can check it out, and scan the QR code up in the corner. That will actually take you straight to my website. That's yourrealtorhugo.com. My name is Hugo Quintanilla. I am a realtor with Long and Foster, North Potomac, Rockville in Montgomery County, Maryland. I am licensed in Maryland. My phone number is 240-389-4846. My email is hugo@lnf.com. Again, thank you so much for your time, and I will see you guys next week. Take care. Have a great weekend.